Dow Industrials now down 130. And look at the NASDAQ. That's down 100, nearly 200 points. David Srtyzewski with me this morning. Now, tomorrow morning, David, 8:30 Eastern Time, we get the new figures on the economy. Well, it looks like it's expanding at a fast 4.2% rate. That's a fast rate of expansion. If that's the number tomorrow, you think interest rates are going up?
Well, great to be with you here this morning, Stuart. If we get a higher GDP number, I mean, there's no question that the resiliency of the United States of America has surprised many, including myself, as far as where we are right now. So there's some resilience. There's some great strength that's going on here, though. But I just want to go back to the Congressional Budget Office and some of the things that they've said that are going to give us an idea of where interest rates might go. And so, we all know about this $33 trillion of debt. But, if we look at, what's coming in versus our debt, we got about 26 trillion of net present debt. If we look right now at where Social Security and Medicare are, you're a baby boomer, there's 10,000 a day that are retiring right now. That's $120 trillion, according to the Congressional Budget Office. I mean, this is not just some loosey-goosey organization here. That's $146 trillion of debt that we have to service. I consider that a very significant issue, especially when we understand that, we have a deficit of $2 trillion right now that's trying to service this debt. And so will interest rates go higher? Well, I think the U.S. dollar is getting weaker. And I think that we're seeing that right now, specifically in the fact that, we're having to sell $22 billion a day worth of new Treasury issues at a time when our budget's not looking as good. We've got potential defaults happening here November 15th if we don't get this thing passed. And ultimately, we've lost reliable buyers like China and Japan, and a lot of these institutions out here that have been buying this long-dated debt. So if the sellers want to sell more than the buyers want to buy, price goes up, interest rates go up, and I think the Treasuries are going to see much higher rates here in the future if that continues.
Higher rates if that continues. Bad for stocks. Case closed. David, I'm sorry I'm out of time. I'd like to discuss this more with you, but that was good stuff. Appreciate it, and see you again soon.